Warm greetings to you, tax accountants all over the world. This is another presentation on the March Tax 2020 edition. That's my private number for your lessons. If you want to have some lectures, you need to just contact me on this number. Then we can make arrangements on how we can assist each other. Okay, so today I've got something special here. We are going to discuss something very special today, an area which I think might also be very critical for you. Okay, let's move on. Okay, you might wonder what were these slides that were just running like that. Okay, this is some of our services. We offer tax lectures, financial accounting, cost accounting lectures, finance lectures and dissertations, a lot of things that we do. So just contact us and we can take advantage of the moment and you pass your exam. So today I want to cover on share options. Okay, and remember this is taxation, right? Section 8.1, it defines gross income and it includes the amount so received or accrued as a result of sale of shares offered to an employee pursuant to a share option scheme as adjusted in accordance with the following formula. So we're saying, let's have a situation whereby there is a share option scheme that is actually run by the employer. So we need also to determine the taxable income. And remember, the formula that we are going to use in this case is A minus B plus C, where A represents the value of shares at the time of exercise of the share option by the employee. Then B represents the value of shares offered to the employee pursuant to the share option scheme. Then C represents the figure, C represents the figure B to which inflation allowance is applied, which allowance is to be determined in accordance to this following formula: D minus E times B over E, where D is the figure for the CPI, right, at the time of exercise of the option. Then E is the CPI at the time when the shares were offered. Okay, so we are going to use this formula. So I'm going to give you an example so that you can actually see what will be taking place. Let's have this example. I've crafted an example. Marcia was paid how many shares? How much? 40,000 shares as a remuneration. This is the situation. Remember, this is section 8. All right, section 8.1. We are under this T. Okay, so we're saying Marcia was paid how much? Was paid 40,000 shares as a remuneration under a share option scheme in 2019. Okay, and the excess price then was how much? Is $3, and the share price, the share market price is $4.50. The inflation rate was 5% at the time of the time the shares were granted, and is currently at the inflation rate is currently at 7% at the moment. Calculate Marcia's taxable income. Okay, remember we are going to use this formula now: A minus B, A minus open bracket B plus C. And I think you still remember what we covered at the we're saying B represents what is they represent the value of shares offered to the employee in pursuant. Okay, I think you can actually do the math. Okay, let me try to get my pen so that you can actually see on this one. Let me try to see where I can get a pen. So we're saying the remuneration in this case, remember, it's how much? 40,000. In this case, these are shares. Okay, so there's no value. But you see the difference in this case, the shares, the debts are very critical at this moment. You need to also to be very mindful of debts. I'm going to show you an example where the debts are very critical, but this is the current shares, right? This is a current share option, right? The shares were actually, the excess price that was there was $5, but it was $3. Then the current market price of these shares are currently trading at the Zimbabwe Stock Exchange, let's say at $4.50. And the inflation then back then when the shares were were granted was 5%, and in this case the inflation rate at the moment is now 7%. Then the question is, say, calculate Marcia's taxable what income, and we are saying under this question we need to use a taxable income. We calculate in this case, we are going to say A, and we need to identify A in this case. A in this case represents the A is the current market value, right? The current market value is actually 4.5. Okay, so this is our A. Okay, we take our A as 4.5. So you need to just do the breakdown. Okay, so we are done with A. Then also you need to also to be in a position to identify B, and we agreed that B is the excess price. Okay, the excess price. The excess price then was $3. Okay, so we take this is our B, but we agreed on the formula that we are going to use. We are going to uh, calculate also to determine the value of what? Of C. Okay, we are saying it's actually B plus C, but we need also to calculate what? We need to determine the value of what? Of C. So we need to compute C. We said we use the CPI, the consumer price index, the current CPI minus the current CPI is 7%, and the CPI at the time at which they says the excise price was 5%. Then we need also to know the excess price. We multiply this one by excess price. We divide almost everything. We are saying we divide almost everything according to the formula, right? We divide almost everything by what? By 5. Okay, this is how we determine the value of what? Of C. Okay, like this one. So we are going to divide this one everything by what? By 5%. So we are actually trying to give the inflation allowance. Okay, let me try to go back so that you can actually see how we determine. So we are saying if you want to determine the value of C, we actually say D minus E, which is the current CPI minus the old CPI over the old CPI. We multiply by the value of shares offered to the employee pursuant of the share ownership share. Okay, I think you can actually see what I was actually saying on this one. So we do the maths. I think the maths is actually very simple. 7% minus this is 0.07 minus 0.05. This will get 0.02. We multiply this by 3, then we divide by 0.05. I think according to my calculation, I got 1.2, right? 1.2, you take 1.2, you take this one back to the formula, this 1.2. So we have obtained the value of what? C. This is our C in our what? In our formula. So when we have the value of C, then we add it to B, and B in this case is what? In this case, B is actually 3. So when B is 3, we add this one to this one, then we get 4.2, we deduct it from 4.5, then we multiply by the number of shares. So this is the taxable income for Marcia. Okay, so debts are very critical on this one. The shares, if the shares were issued after 1 February 2009, okay, this is how you determine the taxable income. But let me give you a situation whereby the shares are issued, they were issued in the Zim dollar era. Okay, let's get to the example. Okay, Marcia was paid 40,000 shares as remuneration before 1 February 2009 under a share ownership scheme, and the excess price was 90,000 bond. Okay, I don't know whether it was bond, but it's in dollars, right? You remember this way back before 2009. The share, the market price is, the current market price is 5.5, right? 4.5. The inflation rate was 50,000%. Oh, that was hectic, right? Remember this moment. I think you remember this moment. Let's say it was in 2008. Okay, so we want to determine the taxable income. In this case, if the shares were issued during the Zim dollar era, it means we need to be very particular on the dates. So if shares were issued before 1 February 2009, or in simple terms, in the period of hyperinflation, okay, you need to just apply the 5%. Okay, just apply 5%. Don't worry about that formula that we've been using. Okay, so you just say 5%. Okay, 5% multiplied by the current value, then you determine you multiply by the total number of shares. Then yeah, that's how you determine the taxable income. So I think this, you are good to go on this one. I will be giving you some notes on this YouTube channel, so I'm encouraging you to continually subscribe so that you can actually benefit. Okay, so I think for the moment, let me try to just go through what we covered. I said I offer private lessons or private lectures to individual as a group or individual online, everything that you want. Okay. Then this is my number. Okay. And we said we are covering share ownership what schemes. Okay. Okay. This was the question, and I'll post some assignments to do. Okay. Thank you so much for now. Bye bye. We meet in our next lecture.